This week we saw Trumponomics and the reflation trade stall, firstly because the inability of the Republican Party to get the Obamacare repeal through. We're going to see another vote on that this afternoon. This is important because it's bringing the realities of Republican congressional politics to fore. And we feel actually, in the medium term, this isn't particularly negative, although short term, it will take some impetus out of that reflation trade. The second area has been quite a sharp drop in inflation expectations, particularly on a two-year basis, and that's largely because of the drop in the price of oil that we've seen. What's of particular note is this very strong rebound that we've seen in the high-yield market for oil and gas lending, and that coupled with a confidence amongst businesses that OPEC will underpin the price of oil has led to quite a big increase in capex production. And we've seen about 85% of businesses increase their production over the last 6 months. That's potentially leading to a supply glut coming through in 2018-19 as shale producers on a lead time of 6 to 9 months, and those longer lead time producers that input a lot of capex in 2011-13 all coming to market at the same time. This likely deflationary impulse will be probably a positive for the global economy to offset that fiscal-inspired inflationary impulse that we're likely to see, and also the wage inflation that we're expecting because where we are in terms of full employment. Particular interest this week was in the auto sector, where we had results from Ali Financial, which is the auto loans provider that is government-backed and received $12 billion of funding in the TARP program, and secondly Ford, which issued guidance this week that was around 30% below market expectations. In terms of Ali Financial, they saw a deterioration both in terms of resale prices, in terms of loan demand, and in terms of sales. So the argument for peak sales seems to be gaining ground. And that takes us into a period where the auto industry is under both cyclical and structural pressure. So in terms of cyclical issues, we've got peak profitability in terms of margins, we've got an intensification of emerging market competition for these companies, and you've got this big credit boost that we've seen in auto loans starting to tail off, as we saw from the Ali results. In terms of structurally, we've also got increased regulation in terms of emissions. We've got a movement to more software being in cars. We've got a shift towards electric. And you've also got an ownership structure change in the form of Uber that car companies really need to grapple with. So we see a particularly challenging outlook for these auto businesses. Next week we go into the UK triggering Article 50. We go in there with the UK economy in good shape. We saw good numbers in terms of inflation and retail sales this week, and as you can see, the economic surprise index is at highs. We also saw some good, strong PMI data from the Eurozone this morning. So what we're seeing is very strong soft data, and we'll see whether that's backed up by the GDP data that follows it. We'll see some GDP data also in the US next week. In terms of corporate results, the one Killik and Go stock will be Wolsey, and they're reporting on Tuesday. That's it from me. Thanks very much.